Sleep Melts.
Melt to sleep fast.
Who can complain about lower prices at the pump? Oil prices are down, oh boy, by a good 6% here in just the first 3 trading sessions here in September. Kevin Kerr of Kerr Trading International, the editor of Global Commodities Alert, along with us still at the Board of Trade and the CME Group. So what's to complain about lower energy prices? Is there a downside?
Well, there is, Tommy. Of course, we're all happy with lower prices. I mean, nobody likes it better than me to go to the pump and have to pay a lot less than I was shelling out just a month ago. But, you know, we have to look at this in the fact that if we get prices pulled back too far, people are going to let down their guard. They're going to go back to saying, well, we don't need to drill. We don't need to look for alternatives. We can just keep going as we were, and the problem is over. And I think that's false. We have higher demand worldwide and lower supply, and we better keep working towards some other solutions. And high prices motivate people to do that.
High prices solve high prices. That's the old saying, right? And maybe $100 a barrel oil says, well, maybe all those incentives for that big SUV looks like maybe it could be a decent purchase if it's only $3.50 a gallon and not $4.50 a gallon, right?
Yeah, we need to keep it top of mind that this is a major situation. It's going to keep getting worse.
And I think another part of this here is U.S. exports, which have been booming worldwide. And if energy prices are a global market, which I think pretty much everybody agrees, lower prices could mean a reflection of less demand worldwide, slower global economy, and that could be a drop for the U.S. exports. And let's face it, that could be a hit to the U.S. economy into 2009.
That's right. If you're getting a slowing economy, you're going to have a weaker dollar, too, of course.
Yep. All right. Well, speaking of the dollar here and speaking of other commodities, really wholesale selling here in September of commodities. Should we see a bounce, which commodity could see it first?
Yeah, I think we have to look at this as a pullback. This is a major correction off a lot of these commodities that got too far, too fast, and we see a lot of that hot money come out of the market, a lot of the spec money. Now we're back at levels that I think you have to really look at fundamental value, and you're going to find that first in the grain market.
And why the grain market here? We're right in the, we're just on the cusp of harvest in North America.
Yeah, there's a lot of potential here. Now, we have gotten some rains in the Midwest. That is easing farmers' concerns about the dry conditions. But I honestly do not believe that crop report is accurate. I think we have a real mixed bag as far as yield goes. And I think by the time we get to harvest, now you got to remember, farmers got this stuff in the ground late. We could get an early frost, and that could be game over.
It was too wet in the spring. It's been too dry of a late summer throughout much of the growing Midwest. And I think, you look at the rise in the dollar and the drop in the gold price here and precious metals really across the board here, seemingly want to be in store for some kind of bounce here. Seasonal demand picking up. Third quarter earnings will begin rolling in over the next couple of weeks from the financial world here. And it's a hard stretch of the imagination that it's going to look anything good at this point.
Yeah, gold and silver have both had very nice pullbacks here. You really have to look at opportunities. We're using option spreads because we want to minimize our risk a little bit. But yeah, you have to put something on for the longer term.
Forget about the hurricane trade when it comes to energy, right? The hurricane barrels through the Gulf of Mexico and oil prices drop by about $10 a barrel here. So if not energy, what is the hurricane trade?
Well, it is going to impact the energy, and I think we'll see that in the upcoming reports. We're going to see a slowdown in production, but probably the alternative play is to play the orange juice market, which has been really hammered on, and you probably buy some options for that for January, and hope not only for the hurricanes, but the hard freeze.
Looking to go long, then, frozen concentrated orange juice at this point.
That's
All
right.
right. We will leave it there. The editor of Global Commodities Alert, Kevin Kerr, along with us at the Board of Trade CME Group. All right, still lots